Hey team, Apex Trades. Hope you're all having a good day. Just wanted to give an update on where things are. Wanted to show again just how well the ABC pattern keeps playing out time and time again. If you've been following me a long time, but at least since I started, you'll know in the past I've been very much a indicator trader, and there's nothing wrong with that. It's just there are limitations. Everything is generally a lagging indicator, which is obviously stuff that's happened in the past to try and predict what may happen in the future. But I don't think anything quite beats, at least as far as I can tell, anything quite beats the ABC pattern. Doesn't always play out, and there's things you've got to be mindful of, but with a sharp eye on things, you can get really good at this. And you know, as for myself, you know, I've probably been trading, I don't know, 3 years on and off, specifically on crypto. But I guess in the last 6 months, I've really taken it seriously, and I've had some okay results. Ultimately, as a trader, you know, you're not going to win every single trade. Some people may trade with, you know, high leverage. Some people may trade with short leverage. That's fine either way. You just got to be mindful of the risks involved. And so I just wanted to maybe on this one again just talk a little bit about the ABC pattern and just how it seems to keep playing out time and time again. So with that, let's get into it. So in order to be able to look at ABC patterns, you want to first get some structure. Yeah, you don't want it to be, let's just say, trading in a range. It needs to either be, you know, an upward momentum or a downward momentum. And we can see here, you know, we let's say if we take this high here, we came down, and each time what we're looking for is a lower high if we're in a downward motion, and then a lower low. Now here you could probably argue, well, we broke structure already because this low here didn't go lower than that. This is where you've just got to have a little bit of patience and don't just jump in straight away, because you know it starts to play out here, and then we come up here, which is lower than this high, come down here, which is lower than this low, and then we came here, and there's the big clue. Okay, and this is where you need to think about a really important concept called order block, right? What is an order block? Well, an order block is where, let me just move this out the way if I can. An order block is where you'll get a snap reaction and normally institutional buys around a key zone. Now, there's nothing at this stage is telling us why this is a key zone, but we've had a couple of wicks that have just played around this area, and then we had another subsequent 4. You know, we've got 4 wicks here. So the first thing I'm going to do is I'm going to note this as a key area, and I'll tell you what the big clue, the big difference is, how we know that this is essentially an order block. If I take my my draw tool here and I map this area out, I'll just get that to the body close. If you look, let me just try and zoom in a touch here. The interesting thing you see is when we get this big engulfing candle, engulfing this last kind of downward candle, so straight away we know this is where institutions didn't want us to get past this point, and we see a big rejection to this side here. And you know what, you can tell here, and this is where the order block happens in reverse. We come back up, come back into the order block. This time it became a seller's paradise rather than a buyer's paradise, and we can see it, you know, just playing out. It doesn't always happen, you know, but these are over. This is an hour. Each one of these candles is an hour, so it takes an hour for the candle to start and then the candle to close. So we knew this was an order block area. What I want to do is I want to map out where is the key point for the ABC pattern, and it's not always perfect, but if we take the ABC tool here, this would have been the perfect execution. So, you know, we're seeing lower highs, lower lows, lower high, lower low, lower high. This is the clue, because we didn't break beyond this pattern here. So we know at some point something is going to happen. So what I'm looking to do is go to the next lower high, which was here. So we go from this point, that creates our A pattern. We go to the lowest point, and then the C. Well, the C can be anywhere. The C is essentially, if this continues to rise and go up, well, it can go, you know, anywhere. But what I'm looking to do, I'll just put it here for starters. What I'm looking is, are we going to break the A, right? So I always just put a horizontal ray at the peak. And what I'm looking for, so I want to see, have we broke the formation? Yeah, so we've been in this downward trend. Are we going to break this formation here? And if we do, what am I looking for? Two things to happen before I'm deciding whether I'm going to come in on a short. Number one, if we do break this A pattern, is it actually a break to the upside and we're going to continue to moon? And then this becomes almost like a support and even an order block in its own right. So theoretically, you know, we've already had the big buy, but theoretically we could think this might be an order block. Or are we going to come down and come back into the A pattern? Now, if you do, that's where I'm looking to short. Okay, so we've come up here, got rejected, come back down, tried to come back up again, got rejected. These are all really positive signs that we're in for the potential move back down, and the ABC pattern is in play. So this is the challenge, right? Are you going to knee jerk into an order and get stopped out? Well, possibly, because what you're looking to do is, if we are going to follow the actual formation of the ABC pattern, then you can have a relatively tight stop loss, right? Now, if we go to the 15-minute as an example, let's just find where that ABC pattern was. It was here, right? So you can see on the shorter time frame, let me zoom in a bit. We had the pump up, came here, and then we kind of lollygagged around this area. Now it's, when do you get in? So let's say I get in on this candle close, yeah, and I wait for the candle to close. So let's say here is my entry point. So I'm just going to mark that with a we'll make this a different color, because I think it's something different to show. So we'll call this the entry point, green. And where would our stop be? Our stop would be quite tight around the A, okay, just above. So let's just mark that off again with another entry. Where would your stop be? So if we got in on this candle, I'm probably going to go just above here, right? Now, here's a stop. So I would have got stopped out there. That's fine. Where am I getting back in this time? I'm getting back in on the next body close, okay? So next one. So I got stopped out, you know, depending on your leverage, not too big of a deal, a couple of percent maybe. Next time I'm getting in on this body close. Now this is going to look quite tight, that's fine. But I've got in here now on my order. Where's my stop? Probably the same up here. So that would have been where my stop would have been this time, yeah. Come back through it again, but then we had the massive downfall. You see this happen time and time again. Yeah, so we've come up, We've waited to break the ABC pattern. We've waited to come back down below the ABC pattern. And then we've got an order in. We got stopped out on this one, that's fine. But then we got back in. And now we've rolled this right the way down. Now you could say, well, where would you ride this down to? Usually, when ABC patterns play out, they work on the 5 wave. So, and oftentimes go to the, let me just get the actual, if I take my low to my high, the 5 waves are normally down as low as 1, can go as low as 1.618, and anywhere in between there in terms of your shorting or longing, depending on whether you're longing or shorting. So, you know, even if you took profit here at your 1-to-1 on your Fibonacci retracement tool, that's a good profit to make. If you kind of go in the middle of here, I don't have all of the different values kind of tick, but there's another one here. I think it's the, let me just double check what that would be. Style. So the 1.272, the 1.414. These are all in that area between 1.618 and 1, which you can use as kind of take profit level 1, take profit level 2, take profit level 3s, ultimately before you finish at the 1.618. Now, it doesn't always play out to that way, but you can map this out quite nicely in order to set your profit. Okay, so that played out beautifully well. We did get in on this trade. As I say, got stopped out here, but we rolled this one down to the 1-to-1 ratio. Took a nice profit. Let's just delete these so we don't convolute the waters. Get rid of that one. Okay, so we'll remove this again, because what I want to show, I mean, on the previous video, this was the last peak where we took a lovely profit from again. Let's remove this order block and let's dive in here. So here's one to the upside now, yeah. So we'll go back to the hour time frame. A bit messy, apologies for this. This was the original one we took. Okay, so where is the lower lows and the higher highs, or the higher highs and the higher lows? So we take our tool, which is this one. We comes down crashing here, go up to here, come down to about here, up here, down here, up here. Now we have the low here, yeah. So we broke down to this point. So already I can see, even without drawing my ABC pattern, where that line is. So it's like, okay, where am I getting in to the upside? I'm going to wait until we break through, which is on this candle. Just zoom in a touch. I'll just bring the ABC pattern a bit further. So this would have been your A, B, C. So A here, B there, C there. Broke through, and now we are going to, well, this is the interesting part. Are we going to break through? I do believe before the big news event, which is obviously the federal funds hike, which I believe will be 0.75, and we'll see a big scam wick to the upside before the big blow off to the downside. I do believe we are headed for higher highs for this moment in time. I think we're currently around the 50 EMA. I think we'll break through that at some point. Maybe we'll come back down and test the heart line of the MFI, but we are coming into bullish territory and on the momentum side of the squeeze momentum as well. So these just play out time and time again. So, you know, realistically, you've got your A pattern here. You know, you're putting your stop just below your breakthrough, and then you're waiting for the upside to happen. These are just such a brilliant tool to master, because, you know, ultimately it takes TA right out the window. You know what I mean? TA is great, but it really only should be to give you confluence of entry. So, you know, I'm looking at, you know, where are we starting to see squeeze? Where are we starting to see downward momentum? Are we overbought? Are we oversold? Are we also approaching a point of interest for where the ABC pattern breaks or comes back down? These are all things that you use as confluence. So the more tick boxes you've got, the better your entry and the higher the probability of your trade. That's ultimately what it's always about. I mean, I normally use about 25x leverage, but I'm waiting for multiple confluences to come about before I dive in. Big news today is going to be 6 p.m. This is UTC or UK time. Is this non-farm? Now, what do I think is going to happen? I think, like anything, the market maker likes to get value for money. So I think we're probably going to come up initially as an initial shoot, maybe come and test this 21k, maybe even as high as 21.5. I don't think it'll go any higher than that. I do believe we're going to get the 0.75 basis points. And then I think we're going to come rocketing right down. I think we're due a big correction from that last pump. I mean, if you look at the pump, you know, this has been what would that be? Do I have my price here? That's a 13% move we've seen, you know, in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, just in 2 weeks. So potentially we could come as high as even as high as here as a pump. That's maybe a little bit too ambitious, but what I'm looking to do is build my shorts as we're going up. So I'm not using 100% of my margin on my account, but I'll have orders at key areas within this pattern. So kind of like 25% orders going up with 25x leverage each time. When am I looking to do that? Let me just see. I'll certainly be having an order around this 2100 or 21k mark, and then I'll have one at 21,200, 21,300 and 21,400. That will be where I'll be building me shorts with a 25x leverage, with the hope that, you know, if 1 or 2 or 3 of them get tagged, ultimately I know if it's a 75 basis point move from the Fed, that we're going to get some decent enough profits. And, you know, at that point, if the earlier ones don't get triggered, then I'll be building shorts on the way down as well to take advantage of the move. Last time, when the last FOMC meeting, we had a 2% increase, which was a big scam wick, basically big 2% move before we eventually came crashing down another 10% over the next day or two once the impact of the news actually filters out and come through. So, you know, we see this time and time again, so be prepared for the initial scam wick. Not saying it will definitely happen, but as history tells, it's usually what happens. Just wanted to take a note of some of the key data. So we had the CPI flash estimates year on year, and then we have the JOLTS and the ISM manufacturing. These are normally indicators, but usually what you see is it's almost like the market knows beforehand what's going to happen. And here we can see market maker building his longs so we can short. So right now he's pushing the price up because he knows the outcome from this is negative effectively. And then we've seen the subsequent within a couple of hours. News wasn't immediate, but it takes a bit of time for the actual market to realise, and that's why, you know, when you get the information, it's so convoluted right now. It's like, okay, is jobs good for the industry? Is it good for inflation? Is it good for the price rise? All of these things are having an opposite effect of what you normally expect. So it takes a bit of time for the mass market to react to some of the news. So it's always like, okay, before the CPI flash estimate, we saw a big push to the upside. It's like the market maker knew ultimately, because a lot of the times, if you're a retail investor, you may not be too keyed into what fundamental news actually means and how it affects things. Whereas, the economists and the institutions, they understand exactly what it means on a more grandeur scale. So this is just building value before the realization of what the actual news means. Same here again. Right now for the ISM and the JOLTS, they built it down a couple of hours before. And now they're starting to go up again. And as I say, if you look at the ABC pattern, I'll just draw this just so it's easier to see to the eye. Where are we? Somewhere around here. A, B, C. This is our C here. Let me just bring that up to the A. This is our break. We come down, we pass below it. Are we going to continue down? Nope. Going up. So other entry would have been, we didn't close. The first close was here. Yeah, so waiting for the candle to close above it. You don't just want to use a wick. That's just a knee-jerk reaction. You want to wait until it settles down. Candle closed here. We put our, here's the thing, that is the challenge of just getting your stop loss. I mean, you can use any of these wicks. Problem is, if you go too low, I mean, maybe you could use the C as the lowest point, but there's nothing stopping that coming back down and retesting it. So, you don't want to go too far, because it can also be a failed move as well. And obviously with a lot of algo traders and bots, sometimes they don't pay too much attention to patterns and stuff like that. They're just in and out and arbitraging. So you've got to be mindful of that. But ultimately, on the balance of scale, ABC patterns play out an awful lot of time. It depends on your appetite for what you want to see as a return. But this is a live chart. We're looking at this now. It's currently 20 to 10 in the morning for me. But I'm almost going to put my X on the block here and say that we're going to see some upward momentum, building the highs for the non-farm and the federal rate hike and the FOMC statements to come out later on, which I think 6 p.m. tonight at UTC. So just be mindful of these. These are things that play out all the time. And as I say, for me, getting that ABC pattern down is a real key to success. So pay some attention to that. And if you want me to cover these again as in the educational playlist, I will cover them, and maybe we'll do a full exercise of just going through each pattern and teasing them apart and seeing on the balance of play what potential what that looked like over 10, 15 trades. More than willing to do that if you guys are there. And also, if you're commenting, I'll always respond to every comment, unless it's a spam comment about Rosie Lee, who's the best trader in the world, and I've made £78,000 million off her, and go and check her out. Here's a Telegram link, all that nonsense. I won't respond to any of that. But if you've got a genuine question and you're interested and you want to know more, or there's a specific thing you'd like me to cover, then just drop it in the comments, and I'm more than happy to do that. I think that's pretty much it, really. Yeah, it is, yeah. So with that, I will say see you guys later. Exciting day. Be wary of the scam wick. Build your shorts higher. If you lose the trade and it doesn't go in, okay, then at least you can get in on the downside. Just don't get in too early, because you will fall the fate of a liquidation. The other thing, actually, just while I'm on this, is to cover liquidation and leverage. That's a key topic that I don't think an awful lot I see time and time again in our Discord server. I operate in a server called MDB. It's a DeFi token. I'll cover that at some point as well. I think that's an amazing project. But just in terms of liquidity, and leverage. I see that question time and time again. So again, if that's something you want me to cover, so you understand how leverage works and how to incorporate it in terms of your risk play, just give us a shout. All right, speak to you guys soon.